Hello, everyone, and welcome back to the Friday Stack. I am very grateful to be joined today by two wonderful market prognosticators. We've got John Gillen, former BlackRock, now host of one of Milk Road's best podcasts, and we've got Avo Stocks over here, the man himself who just called the Coinbase earnings and how it went down. We got a big show. Bitcoin back up $69,000. Have we seen the worst? Well, today we're going to break it all down. We got a Mount Rushmore competition where we're going to discuss the classic signs of a Bitcoin bottom. What do you see? What kind of technical indicators are there? And what kind of personal anecdotes do you know to pop up on your timeline to let you know that Bitcoin has officially hit rock bottom and is about to bounce back? John, how are you doing today? Thank you for joining us.
I am doing fantastic. I just spent the week at a conference here in New York City called Bitcoin Investor Week with Pompliano and a lot of other great people. Great energy, great enthusiasm, a lot of institutional interest. So I'm really excited to be here. It's a great opportunity in the market.
I was going to say we were there too. We must have missed you there. But yeah, I thought it was awesome. I mean, it was really cool to hear from like Johnny Ives. We listened to Scaramucci. We just had Grant Cardone on, so he was pretty funny up there too. And you got to give it to Pomp too. Like 10 hours of straight podcasting. I looked at Rob and I was like, that's very impressive. We go like 2 hours at a time and like I'm exhausted afterwards. So it ain't for the faint-hearted. And he did a good job. So it was a great conference.
Yeah. He spent a lot of time in his Johnny Carson chair up at the desk, but there was a great parade of characters coming through, lots of alpha. So yeah, I didn't catch every conversation, but I'm looking forward to watching those as they drop because there was just a lot of great wisdom going around. So yeah, it was a great place. I'm sorry I missed you guys. I'll have to catch you next time.
Yeah. No worries.
So what was your main takeaway from Bitcoin Investor Week here in New York City?
I think the biggest thing is just that this institutional interest has never been this high. The demand has never been this high from institutions, and they are viewing this as an enormous opportunity. At the same time that retail is quitting in fear and like apathy, whatever you want to call it, right? We've never seen fear and sentiment this bad in the Bitcoin markets among retail investors, and we've never seen enthusiasm and adoption this high and this strong from institutions. That gulf eventually closes, I think, and we do get retail to come back, but usually at much higher prices. And so what I'm trying to do right now, what Milk Road tries to do, is to get people to take a longer view of their assets, longer view of their investments, not to trade based on emotion, not to get shaken out by things like this. Focus on the data, focus on the fundamentals, and allocate accordingly, because trading on emotion right now is a great way to get wrecked. So yeah, the biggest thing for me was just the overwhelming amount of institutional interest, demand, and action in Bitcoin and in the industry right now. So it's a very exciting time.
So Avi and I, we're podcasters, but you're a podcaster with some BlackRock experience behind you. So please tell the audience about your career before you picked up the microphone.
Yeah, so I've been in and around digital assets for a long time. One phase of my career was 6 years on the Aladdin platform by BlackRock, which has, I think, now somewhere around $50 trillion of assets under management on the platform. It's like an enterprise software solution for financial portfolio management, right? So everybody who holds a stake in that life cycle, from risk officers, compliance officers, traders, portfolio managers, research analysts, they all can interact with each other through that one platform. And there's like, I think 26 or maybe more than that different software tools within the platform. So at any event, I was on that platform 6 years in client services, relationship management. I also got to work a lot with our digital assets team. And as part of that, I helped out a little bit on the integration that we did with Coinbase a number of years ago, and got to go to several conferences with BlackRock on my name tag. And when you walk up to a booth and ask someone about their project, or ask questions about crypto, and you're wearing a badge that says BlackRock, they talk to you a lot, and they you get to learn a lot that way. So really enjoyed that experience, learned a lot, made a lot of great relationships. While I was at BlackRock, I was also writing as one of the writers for the Discover Crypto YouTube channel, doing educational content around digital assets, which has always been something I've been very passionate about. Because one of the difficulties, I think, with this asset class is that this has been said before, but it combines everything that people hate and don't understand about computers and technology with everything that people hate and don't understand with about finance and into one thing. So trying to make it accessible, understandable, and working on education and entertainment content, I think, is important to me. So I did that for a while. I left in February of last year. Launched my own fund called True Capital that's focused on direct allocation to Bitcoin and other digital assets. And we have a institutional grade custodian partner in BitGo for security reasons, which I think we'll talk about later. And then we also have proprietary algorithms that backstop our fund so we can stay long and accumulate and even outperform during bear markets. So I'm excited about this downtrend we've seen here. And then I'm also now at Milk Road. So for the last about half a year now, a little over half a year, I've been the host of the Milk Road Macro channel, and I take some episodes sometimes on the main channel on Milk Road, focusing on macroeconomics, digital assets, and just like I said, education, interviewing experts, and trying to put out the good word about the opportunities that are here. So yeah, that's a bit of my story and background there.
Quite the dichotomy from moving from BlackRock to Milk Road. Milk Road's gotten more like institutional. They have great, I mean, they're fantastic. I was just mentioning, shout out to Johnny T if he's listening. But yeah, what was that like? Just like psychologically moving from BlackRock, where you probably had to talk a little bit more muted or filter and think about what you're saying before you say anything, right? Versus Milk Road, which is much more retail and friendly vibes, I'd say.
Yeah, I can speak much more off the cuff now. But I'll say very strongly that I think that BlackRock's leadership on the adoption of digital assets by institutions has been really great. They haven't gone for like permissioned solutions. They've tried to engage with public blockchain infrastructure. Their IBIT product is, I think, the most successful financial product in history. Got to $100 billion valuation at one point. So it's been huge. Proof of concept, proof of product market fit for digital assets. And BlackRock, I think, has done a really great job of doing that. The leadership over there are great people. I know a lot of them, people who have left since I've been there, but Robbie Mitchnick, for example, I think is just a fantastic leader, thought leader, and does a great job of bringing the two worlds together and in a way that makes sense to both sides. So yeah, I'm really appreciative of BlackRock, what they've done, and the opportunities I had there. Now that I'm outside of those walls, it's a much different conversation, and it's interesting to watch and observe them from the outside. Just this week it was announced that they've made this partnership with Uniswap and bought some Uni tokens. So it's cool to see them getting very committed to decentralized finance. I'm interested to see how that develops. And again, I think this is just one of those things where BlackRock doing it first is sort of proof of concept for the rest of the market, and then other asset managers, other players from Wall Street can come in and begin to offer products and explore and create new products and services that are ultimately better for everybody, all stakeholders. So yeah, I'm excited about that. The transition has been interesting. I kind of decided, candidly, I could stay at BlackRock and make Larry Fink filthy rich and maybe get another 5K bump in my bonus one year or something, or I could go out and try to build something on my own, right? And I think that that's what I'm trying to do, because I think there's a lot of capital, particularly on the fund side of what I do at True Capital. There's a lot of capital right now in the United States that is, I would say, negligently underallocated to digital assets. They're starting to go up that learning curve, but there's a lot of pitfalls, a lot of predators, a lot of mistakes you can make. Bitcoin is a bearer asset. A lot of people are uncomfortable custodying their own capital, their own assets. So they want a partner to go with them on that journey, make sure they feel safe, make sure they feel like their investments are going to be secure. So it's been a lot of opportunities, different outside than inside, but both have been really great experiences, and I'm really excited about being at Milk Road specifically because I really love the content and the quality that comes out of Milk Road in terms of education, news, information, the way that we pivot and adjust and stay current, keep people informed on things. Everybody I've ever talked to in crypto who knows about Milk Road loves it, and I love our community there. I often spend a lot of time in our Discord and on our AMAs, just going back and forth with the community, learning from them. So yeah, it's been a big transition, but a good one, and I'm grateful for both experiences a lot.
Cool. Yeah, you guys, your podcast is killing it. You got some great guests coming up on a weekly basis. Fun to see that grow under your leadership there. And one thing I got to ask before we hop into the news here, this Aladdin program, I remember seeing a video back in like 2022, something like that, before BlackRock was involved in Bitcoin, and Bitcoiners sort of warmed up more to Larry Fink and the black stone that it is, But this video said that Aladdin was the software that runs the world. This thing can predict the future. It allocates money towards resources and things that it wants to see come to life, and that this one piece of software runs the world in the background. Is that true or not?
Sorry, so inside of BlackRock, and specifically on the Aladdin platform, this is like one of the biggest running jokes. So the way I try to explain this to people is making that kind of an assertion is like saying that Microsoft Word wrote the Game of Thrones novels. It's just like these are software tools. They are not sentient artificial intelligent tools. There are some things that we have in there in terms of models, like people try to do a lot of like portfolio analysis on, what happens if a 2008 style recession happens, what's my risk exposure to that. BlackRock and Aladdin, the secret sauce there, the big differentiator is that they speak in a language of risk and exposure, not necessarily in terms of like P&Ls or dollars and cents, right? It's all about thinking about what's your exposure if this happens, if there's a shock in oil prices, if there's a 2008 style recession, if there's a war that breaks out, right? So we try to model some of those things. We have a whole team who does a lot of work on that, but it is in no way predictive. It's not controlling all of this money. Our clients, users of Aladdin, would not be clients if we were controlling their assets. But I think that one of the big value propositions of Aladdin is that it leverages a lot of BlackRock's data, and like having all these people come together and leveraging one system makes it more powerful for all of the users. And that's why they're kind of using this, because before Aladdin, there was a different system for every different part of the business, every different part of the portfolio management lifecycle. So having it all in one platform is sort of like a seamless use, right? So it's like, the way I explain it to people is like Microsoft Office, you have Outlook, you have Excel, you have PowerPoint, you have Word, but there's a little bit of like a seamlessness because you're all in one suite of software products and tools. And that's kind of the value proposition of Aladdin. But all of these things that you see on TikTok about this is controlling the world and it's a machine that makes its own decisions and allocates its capital. All of this stuff is, and I can assure you of this because I know intimately the interior of the workings of this company. This is not the case. There are many problems with the system. They are always trying to make it better, but it is in no way a sentient overlord that's controlling all the world's capital. That's just not what it is. It's nobody has that. And if they did, we wouldn't be selling it to clients. We would just be using it to take over the world. So
yeah. Quick question on that, because you always hear about these algorithms that all these massive funds have, right? With AI, and I'm sure they've figured this out, but how are they understanding what's bots? Like, is there a team of Russia that wants to like for example, the Coinbase? All I saw on yesterday's news was Coinbase is going to shit the bed. They're going to die on earnings, like everything. They were talking about Brian Armstrong, Coinbase stopping withdrawals for a second. And I was like, this has to be all priced in. And so I went long actually. And I said, okay, I'm going to zig when everyone else zags, and I'm going to take some calls. And I happen to be right here, but how are you guys, and how do you think that they're factoring in, just teams of bots that want to send news one direction? Do you guys pick that up then and make a false action on that? Or obviously
so
you guys...
I could be speculating on this, but I don't really want to, and I don't want to necessarily speak for BlackRock. I still have tons of friends over there. I think that they are a great organization, does a lot of good things. I'm sure that they have ways of navigating systems like that or situations like that. But I don't think bot attacks on social media, like creating narratives, is impacting much of what goes on with the users of Aladdin or with Aladdin itself. But yeah, I don't want to speculate about too much about the stuff under the hood or like go talking. This is what BlackRock does, because like I don't work there anymore. I don't represent them. I don't speak for them. Not financial advice. Anything you say can and will be used against you to court of law, etc. But so I don't want to speculate too much about that. But they have a really robust ecosystem and a great product, and that's why the market trusts them so much.
Well, then let's get into the news here. I would love to get your opinion on this piece that came out yesterday. So there was rumors for the last couple of months, but it's finally gone to vote. The Dutch Parliament, the House of Representatives, just passed the 36% unrealized capital gains tax applying to stocks, crypto, Bitcoin, of course. And it works like this. So let's say you have 500 shares of a company. It's worth 50,000 euros. And then a year later, it's worth 100,000. So you've made a $50,000 unrealized, or 50,000 euro unrealized profit. So then they want to take their 36% of that, right? So there's an exemption if you're married, 3,600 euros. So then they're going to take 36% of 46,000 euros. That comes out to 16,704 euros. That's your tax bill on an unrealized gain. You didn't sell anything here, right? This is just your paper gains. They want $16,000 because you made a paper gain. Let's say it then crashes and it goes from 100 grand to 60K, right? Well, you're no longer worth 100 grand, you're worth 60, and you still have to pay that 16,000 euro tax bill. And so then you're taking that 16,000 away from the 60, which it actually is worth, and you're left with 43,000 euros. So your original shares, you had 500, now you're left with 360. So you had to sell 140 of them, which comes out to 28%. And your paper gain before was 50,000 euros. Your actual profit was 60,000, but then they take that and you're left so much poorer than you would have been over the just regular capital gains rules as we have them today. So this is actually happening. Euro, they are putting up the ring fence. They want that capital to be kept within the old continent and want to make sure that it does not flee. What is your take on this, John? And could we see this come to America?
How are they going to prevent the capital from fleeing? Because when I see all these laws getting passed, to me, I remember the Jeff Bezos quote, "Your margin is my opportunity." What they've created is a regulatory arbitrage that, if the cost of relocating your business or your life out of this jurisdiction into another one that is much more tax friendly, that's an economic incentive for all that capital to leave. I think people who don't have assets that are impacted by this won't really care so much, but the people who do are largely going to be well-capitalized individuals or corporations. So if they're the ones that are incentivized to leave, you can see mass capital flight. That creates a huge opportunity for other jurisdictions to try to attract that capital, incentivize that relocation to happen to their jurisdiction. I think this is just like a thing that for some reason this idea has propped up. To me, it's the most like backwards, like counterproductive policy choice any regulatory jurisdiction can adopt, because it incentivizes the largest holders of capital in your jurisdiction to leave. Mark Zuckerberg recently left California because of this thing too. A similar policy being enacted there. A lot of other billionaires have already done that. He was like one of the most recent ones. But I think that there's an opportunity to be had in attracting those individuals, attracting that capital, because if you can get them to relocate and get them to stay, then you've basically secured a huge amount of future revenue from increased economic activity and capital allocation in your jurisdiction. So I don't understand the rationale behind adopting these kinds of policy choices, to be honest with you. It seems like one of those things where it's like, you have to try it and see how bad the results are before you're like, okay, maybe that wasn't a good idea. But, I don't know. Some people don't understand economics. I guess we'll see. How do you think they're going to keep pet capital from leaving? Because to me, it seems like they're asking it to get out.
100%.
I was just going to say, we kind of have it as like a microcosm with property tax today in the U.S., right? Like your county assesses your house, tells you how much it's worth. You may or may not get that actual price, right? And so it's a much smaller scale. Houses aren't fluctuating, 50% like Bitcoin, or, you could have you find a stock that has look at, INTC right now, and like Micron, like you have a run like that where it's up 1,000% in 6 months. You have to, that's insane. Like, people are going to leave, and companies are definitely going to leave. And yeah, I mean, the housing was the closest thing that I could think of here in the US where it feels unfair many times. Right. But yeah, this is absolutely insane. Like I can't. So is it for sure a law, or is it like that? I don't know how it works in the Netherlands, but like, do they have a House of Representatives and then the Senate has to like approve it?
Yeah,
or
the Senate's already checkmarked it. It's already through the Senate. Yeah. And the right wing was supposed to stand up against this, but they caved. And their reasoning was, we don't see a way around it. They've got like a €2 billion hole in their budget, and this is the only way that they can see doing it. It's so funny as an American, you hear €2 billion, like who cares? Just print it. But I guess they can't, like America can, right? We don't care about a $2 trillion deficit. They care about a €2 billion deficit. So pretty crazy. But yeah, I mean, I think Sweden already tried this, and France definitely tried it back in the 90s, and it was disastrous. Their entrepreneurs fled all over the world to get away from it, and then 10 years later they had to reverse it because they realized how untenable it was. But it seems as if these governments are going to do whatever stupid policy they can to try to feed the beast. Government really has no end to its appetite when it comes to your money, and they are going to find more and more creative ways to get it as they get increasingly desperate. Any final thoughts on this, John?
Desperate is the right word. Desperate is the right word. You can't taper a Ponzi. All of these nations are fiscally insolvent, have been for a long time. And I think they're sort of betting a little bit on the fact that because all of these other neighboring jurisdictions are insolvent, they'll have to adopt similar policy measures. And so there won't be, quote unquote, anywhere to run, basically. I think that is a bold and risky assertion. And I don't think that's going to be the case. So we'll see what happens. I don't know. I think other countries that have maybe not been so welcoming to immigration might change their mind if people are offering a lot of money for a chance to get into their jurisdiction. prediction. So we'll see. But I think that it's desperation is exactly the word. And I think that nations, corporations, individuals, a lot of people who are still stuck in this fiat doom loop are starting to feel that desperation creep in. And not everybody has the luxury of just being able to print their way out of it in all these circumstances. So, I hope that they reverse course and try to find a different solution. I hope we all do. Bitcoin is still available for purchase, but we'll see how this all plays out.
Yes, we
yeah.
shall.
Well, this will affect Bitcoin, I'm assuming, as well.
Yeah,
right?
yeah, 100%.
So it's. I was looking it up. It's not going to go into effect until 2028. So I wonder if
Yes.
there's elections between and there's massive uprisings in the street, and that's an insane. I know they were like talking about it in the U.S. and people just like laughed about it. Or like that is absolutely not going to happen.
We may not be laughing long. It could,
California,
this could get real quick. Yeah,
California.
California looks.
They're already fleeing.
Someone just put a huge bet on that actually last night. I saw it was like $200,000 that the billionaire tax will pass in 2026. So,
well, they're already left. They already left. The biggest billionaires in California
have already left from All In podcast.
Well, he got out early. He smelled the winds of change. But speaking of governments and taxes, one ways that the government in America has gotten more and more tax revenue over the last couple of years is gambling. And that is exactly what we're seeing here. Trump has decided to create a new advisory committee featuring gambling, crypto casinos, and prediction markets. The Trump admin launches a new innovation advisory committee at the CFTC, bringing together leaders from crypto, prediction markets, and online trading platforms, including Brian Armstrong, Vlad Tenev of Robinhood, and Shane Copeland of Polymarket. The Commodity Futures Trading Commission says the committee will help future-proof U.S. financial markets and ensure regulations reflect rapidly evolving platforms, including crypto, DeFi, and prediction markets. It's just crazy. DraftKings is on this board, right? FanDuel is on this board. They're creating an advisory committee for sports betting apps to be a part of it. John, what do you think this says about our current economy here in America?
So I think the underlying root of this is this idea of financial nihilism that we've seen rising. I think there's always been speculation. There's always been an appetite for gambling. There's always been a certain element of the marketplace that's seeking risk, seeking short-term gains. But it's gotten much more, let's say, powerful, focused, larger in size and in capital in recent years because of this financial nihilism thing we've seen. What I mean by that is that there's this sort of generalized experience in our society where people are in debt. They're not able to really save in any meaningful way. At the end of the month, they have a few dollars, a few $100s, something like that left over. They have a choice between trying to save that and hope that in 20 or 30 years, they have some sort of meaningful retirement savings left over from that. But most people don't feel like that's even possible. And they have debt and obligations that make it seem like it's never going to be possible. So instead of treating that like an opportunity for an investment or for savings, they treat it like a poker chip or a lottery ticket. And they're looking for ways to get entertainment out of their capital. So you see this. The symptom of financial nihilism is financial entertainment rising. That has gone through a lot of permutations, evolutions. We saw CryptoKitties, the ICO craze, then there's the Bored Ape Yacht Club, the NFT boom. There was game stonks and AMC and all these different things that happened. Like the movie Dumb Money really shows how this became a cultural thing, a community thing, an entertainment thing. And the latest iteration of this is prediction markets. The volume on prediction markets in terms of number of users, participants, and then capital being spent and money being earned is really staggering. I think Robinhood spun up a new prediction markets product on their platform in just like the last couple of quarters, last few months here, and it's already accounting for 11% of their revenue as a business. So it's a really enormous demand, and it's not going anywhere. I think that a lot of people can look at this and be very skeptical, but I think it's also a way of just addressing reality and being like, okay, well, which one of these products, what of these products and what of these prediction markets qualify as gambling, fall under the existing regulations around that, need to get gaming licenses and so forth, and what doesn't? How do we adjudicate that? Who adjudicates it? All these things. So I think having a formal conversation with government around that makes sense at this point, because you're not going to, the cat's out of the bag on this. So yeah, I don't like support this. I don't think it's a good thing. To me, it's like asking, what percentage of your portfolio are you willing to just light on fire for the pleasure of watching it burn every month? So I don't participate in this stuff myself, but it's, like I said, it's a major part of our marketplace now. So it's important to make sure that it has some sort of dialogue with regulators, and there's some protections for consumers around some of these things who do choose to participate. But I don't know. It's the world we live in now, and it's a strange place, but it's where we are.
Yeah, I was just trying to find this tweet here too, because like prediction markets are absolutely exploding. I think they beat Vegas in Super Bowl bets by like 10x. I'll try to find that exact tweet, but that was pretty crazy. I just saw DraftKings 2 weeks ago partner with crypto.com because DraftKings can't in Texas, I think California, some pretty big states they can't operate in. And so they now partner with crypto.com for these player props in those, jurisdictions. And so it is kind of blending and everything is kind of coming together, right? You see Robinhood first doing stocks and crypto. Now you can literally take your 401k, place it on a 12-leg parlay, with one click. Like my friend was talking about this the other day. He's like, it's very dangerous, right? You're literally saving up and within 2 clicks, you're now dropping your 401k into a parlay.
Gambling on Saquon Barkley. Yeah, it's insane. And yeah, it's absolutely true that financial nihilism has taken over this country, especially with the youth. If you see your purchasing power evaporate before your very eyes, you want to bet big because you don't really care about what's coming tomorrow. You want to try to 100x. The 10x doesn't do it for you anymore. You got to try to 100x with that 12 leg.
What do you think, though? Like going back to your original question, Rob, like what does this mean, right? Like a couple years ago, CFTC was suing Brian Armstrong. Now he's, I think that is somewhat positive for Bitcoin and crypto and, I guess the gambling markets as well. But like now they have a seat at the table at the White House. What comes out of this, do you think, ultimately? And like, what are they going to be actually doing?
Is that a question for me?
Yeah, John, sorry. You on the spot, man.
I think so. The truth of that is that I think it's highly dependent on outcomes of things that haven't been decided yet, right? So if we see the Clarity Act get passed with like meaningful market structure clarity and regulatory certainty come through Congress, I think that puts us in one sort of regulatory regime. However, if they don't reach a compromise on like stablecoin yield and some of these other sticking points between the cryptos and the banking side on the Clarity Act, if that compromise doesn't happen, that bill doesn't come through, then I think we're kind of at the mercy of, or not the mercy, but like at the whim of whoever the next administration is and who they appoint to run these regulatory agencies and what kind of stance and outlook they take. Because, it's great that there's a conversation happening right now, but if the next administration is like the prior administration and takes a stance of saying like, hey, we don't want this in America. We don't want anybody to be able to do business here. We're going to use extra constitutional means to sort of use soft government power to force you out of our country. That ends up in a much different situation. So I think it's positive. It's constructive for now. I think we need to see congressional action take place to protect the industry from future administrations that maybe have a much different attitude towards the industry and the asset class. I think we got to see how that shakes out. I don't really know yet. I think we will get a bill, but I don't know what the bill will be like, right? There might be so much compromise in it that it's kind of watered down to being like a shoulder shrug. So we'll see how it plays out, but I still think that that's up in the air for now.
That's what I don't know if you were there for Scaramucci's talk, but that's what he was talking about. He thinks it's going to go through, but Bitcoiners and crypto is not going to be very happy with the results.
Yeah.
And
right.
He's pretty close to administration, so who knows? But Rob, what do we got here? The Friday stack.
Yeah, let me take it away because we got to fight against this financial nihilism. And the best way to do that is with Bitcoin. You got to Bitcoin pill your brain. You got to get a low time preference. You got to think about the future. You got to save. You got to think about how to improve your life over the long term. And we're helping you do that right now, today, with the Daily Stack. Go over to 21rates.com/stack. And you'll find this, the wheel. You can win and you need to enter. The code word for today is John. John is the code word for today. You're going to sign in, you're going to enter the code word, and you're going to be entered into the opportunity to win 21,000 sats at the end of this show. So again, that website is 21rates.com/stack. Enter the code word John, and you will be able to enter today's contest. And I would also like to give a big shout out to our sponsors of this show. One of them is Rhino. Rhino Bitcoin is the best place to go out and buy your Bitcoin. Why? Because they are combining all the different facets of Bitcoin finance into one place. You can buy Bitcoin with some of the lowest fees anywhere, get more sats for every dollar you spend, make lightning payments, send Bitcoin anywhere around the world instantaneously with near zero fees. You can also send cash. You got friends or family in another country, you can send cash over lightning rails and it gets there super fast, very low fees, and they get fiat that their desire at the other end. And of course, you can DCA, set up automatic savings, pick the time, pick the percentage of either up or down that you want to buy Bitcoin at, and you can set it and forget it, and you will keep adding to your stack on a daily, weekly, monthly basis. And soon you'll be able to pay bills, direct deposit, borrow against your Bitcoin, and even save for retirement all within one app. And of course, security is top priority. Biometric verification, 24/7 fraud protection, and the confidence of knowing your Bitcoin is never rehypothecated. So go today to rhinobitcoin.com. Download the app. It, of course, it's for Apple or Android. Use the code Bitcoin News and you'll get $10 dropped right into your Bitcoin wallet just for signing up. Very cool. Thank you so much to Rhino for sponsoring this show, as we are about to get into the next part of what we do here. So, gentlemen, are you ready for today's friendly competition?
Before we do that, apparently the code word is incorrect. So it looks like they changed it here to Bitcoin Jesus.
Bitcoin
Let's
Jesus.
go. Bullish.
Bitcoin Jesus.
Those, if that's not working, please check it out. But capital B, Bitcoin, capital J, Jesus. We're going to be giving away 210. What is it? 21,000.
21,000.
Big giveaway.
We gotta get it. We gotta
stack up. Yeah.
How did you pick your name? You stole Roger Ver's name?
So my handle, my ENS handle is bitcoinjesus.eth. Just because everybody who's in crypto will immediately understand why that's a funny name. And it just amuses me every time I say it. bitcoinjesus.eth. It's hilarious. Look, I think Roger Ver is a complicated, controversial figure. I don't necessarily agree with all of his views or whatever. I don't want to get into a whole debate over him as a person or what he's said or thought about Bitcoin. But I do think that he is one of the earliest and most important evangelists of Bitcoin, gave away many thousands of Bitcoin, of his own Bitcoin. I think we owe a lot to him as an industry and as an asset class for the work that he did in evangelizing people about Bitcoin early in the development of Bitcoin as a protocol, as an asset, and changing a lot of people's thoughts or understandings about it. And, he had Bitcoin faucets. He was giving away Bitcoin. He did a lot of the earliest investment in Bitcoin. I don't know. I think he's an interesting figure. I like the name Bitcoin Jesus. I just think it's funny. And then bitcoinjesus.eth is hilarious. And it's always, I like to say it pisses off all the right people. So that's where that came from. And it's fun. If I'm not having fun, what am I even doing here?
And I mean, the tagline on Truth Capital is you're trading these other digital assets to get more Bitcoin. Is that how you see it? Do you still see Bitcoin on top of it all?
I think the tagline that I go with True Capital actually comes from the Bible, which is Proverbs 23:23, buy the truth and sell it not. And the way I explain Bitcoin to people is, whether or not it's the best investment you can make, I don't know about that. I'm not going to get into all this hard money fighting with everybody, but I do know that it's like buying 2 + 2 = 4 in a world where the government tells you 2 + 2 = 38 trillion. And that to me is worth it. It's like buying The Emperor Has No Clothes as an investment. That is a unique offering on the market. That's one of the things I've always liked about Bitcoin. I like that nobody can control Bitcoin. It's short all the right things. It's short the Communist Party of China. It's short the Federal Reserve and Jerome Powell and Joe Biden and everybody else, right? It's short Gary Gensler. It's a great investment because of what it's short, but it's also a great investment because it's like buying truth. And if you're able to put your capital into mathematical truth, to me, that's a really great and attractive investment opportunity in a world that's defined by lies of fiat and central bank fiat currencies. So that's kind of how I would characterize Bitcoin. The goal of True Capital is not necessarily only to accumulate more Bitcoin. That is the focus right now, because that's, I think, the focus of the digital assets industry, clearly. And so that's where we do a lot of the bulk of our allocation and focus a lot of our attention. But to me, it's less about like Bitcoin specifically and more about truth and escape from all this lies and the manipulation of the central bank fiat system and protecting your capital from that.
So we're about to play a game about signs of a Bitcoin bottom. How close do you think are we to the bottom?
So great question. I think that we are getting pretty close if we're not there already. I think that we're likely to see a bounce here into March. We could see further downside action. a lot of people are saying that we're just following the 4-year cycle. I think that there's other things at play, and we're just seeing what I've called spurious correlation that suggests that this 4-year cycle has played out this time. I think there's a lot of other things in the marketplace right now from the macro perspective that could see a Bitcoin bull run result here in 2026 before people are expecting it. But kind of no matter how you slice it, right? If we have to wait till November after the election to get some certainty in the market and see another recovery, or if we see the macro tailwinds lift the rest of the asset class and Bitcoin higher, either way, we're going to go higher from here. So I think we're in a process of bottoming. We've worked through in about 4 months the negative bearish price action that it normally takes us 12 to 18 months to get through. We've gotten close to the 200-week moving average that usually provides a bottom of support. We've also gone down now through the top of the previous market cycle high, which also usually serves as an approximation for where we would bottom. So I think there's a lot of things to point to say, and we've also never seen the RSI this oversold. We've never seen fear so bad, sentiment this bad before. So there's a lot of reasons to think that in many ways, by many metrics, we have bottomed. However, that doesn't mean that price, because we have low volume right now, we could see price wiggle up and down in different directions. We could see us dip into the 50s, but if we do, I think you're looking at a wick, not like, spending 4 months below 50K, something like that. So that's kind of my view on this. To me, below 70K is an accumulation opportunity. It's a fat pitch, right? The value on Bitcoin has gotten really strong now. Even JP Morgan released a report last week talking about how they think the value is in this range is really incredible on Bitcoin and other digital assets. We've also seen a lot of bullish momentum from institutional adoption. Fidelity launched their own stablecoin. Goldman Sachs disclosed a $1 billion position in Bitcoin, a $1.1 billion position in Bitcoin. Like I said, BlackRock recently started buying Uniswap, moving into DeFi in a serious way. There's just more capital coming. Eventually, it pushes us higher. So I don't know if this is the Pico exact bottom on the USD chart, but by many metrics, we're bottoming, and we're going to start building and forming a base and going higher here eventually. So if it takes a couple months, if it takes until November, whichever way you want to look at it, this is a bear market low or a macro downtrend low, and I think we form a base and go higher from here.
How do we, before we jump into Mount Rushmore here in a second, how do we get retail back? Because I feel like I've heard institutional, over and over again. And even at 60K, right, this financial nihilism concept, if it goes back to 100K, people always think you can only buy one Bitcoin, right? So you have to spend 100K. Yep. You don't. For those listening that don't know that, obviously you don't need to do that. But how do you think we get retail back in it? That Coinbase commercial, I don't know if that was the catalyst for us that we needed.
Yeah, I think that actually irritated a lot of people who were kind of like, boo. But you know what? I think it really does come in time. You have to do brand therapy around crypto and digital assets, make sure people understand that it's not just all scams, that there's a lot of value in these assets too. But I think that the best public relations you can have is price appreciation. And you're going to see that's none of the hot ball of money that's currently speculating on gold and silver actually cares about gold or silver. They care about the opportunity to create a profit and to come away with more than they put in. So that's what you need to see in digital assets and in Bitcoin, again, to get that retail speculation back. My view is the opportunity in the market is actually better, stronger, and much easier to navigate while we just have institutional capital allocating for the long term. Because we're likely to see, like we've seen for the last several years, this sort of steady march higher, less froth, less speculation, less, the meme coin casino will come back at some point, but there'll be less of that, right? And that to me is a healthier market, a more stable market, less prone to volatility in these big swings and bull and bear markets. But yeah, that overvaluation and euphoria comes back once I think we get over 100, maybe over the all-time high again, and then you'll start to see retail really panic buy in, and we'll see some FOMO blast off tops.
Love it.
Boom. All right, boys, we ready for this game? Let's get it going.
Fire away.
All right. So, John, you are up first. Of course, this is Mount Rushmore. And the name of the game today is Signs That Bitcoin Has Bottomed. We're talking technicals. We're talking anecdotes. We're talking Peter Schiff. How do we know when Bitcoin has finally reached the bottom and is ready to blast off once again? So it's going to be a snake draft. John, you're first. We go through. Avi picks twice and then back around the opposite way. So, John, please, with your first pick, what do you go with?
I'm going to go with Jim Cramer calls for Bitcoin to go to zero. I think that God takes notes off of what Jim Cramer says. And when Jim Cramer says we're dead, that means we've bottomed and the bull run is back.
Inverse Cramer. Yes, that is a classic.
You think he's a genius, trying to help retailers out, and people are hoping you catch on, and all right, go inverse Cramer here.
Do I think Jim Cramer's a genius? No. I think he's paid to be like that's, allegedly, let's say, not directly paid. I don't want to make any like accusations, but he benefits from shilling certain things. So let's just say it that way.
Totally. And you're talking, like I had this with my old podcast, you're talking about 20 stocks a week. Some of them are going to look like shit, eventually. So that's the other thing. He's talking about every stock every day. It's kind of hard, and people kind of pick and choose what they attack them on. So right. Good first pick though. That was definitely on my list.
All right, over to me. I am going to go with this one. It happens big time with the biggest blow-ups, and that is when an exchange goes down. We got, of course, Mt. Gox 2014 led to a huge Bitcoin bear market, but that sacrifice needed to happen. And then, of course, we saw it again. FTX 2022 led directly to the worst of Bitcoin bear market, dropping below the previous all-time high from 2017, going down to around 15.9K at the end of 2022. So once you see an exchange blow up, a big name, a place where a lot of Bitcoin was stored and a lot of Bitcoin transacted through, that's a pretty good indicator that we are at the bottom, or at least close to it. So yes, that is my telltale sign that we are close to a Bitcoin bottom.
Love it. Well, we just talked about this weekend. I can't even remember the days anymore. Where Binance is on predicts right now where they may blow up by the end of March. And apparently there's some whispers going on that Binance is not in order, and knock on wood, that would not be good if Binance goes down. So hopefully that doesn't happen. I'm going to go pretty basic, but fear and greed index goes to single digits. I just checked it. We're at 9 today, but it hit 5 in February, one of the lowest ratings in the index history. It only ever went that low during the COVID crash of March 2020. So that is actually like a data point that people can look at. After COVID, the single digit reading, Bitcoin went from 4,800 to 69,000. After the 2018 single digit reading, Bitcoin went from 3,100 to 69,000. So people are afraid right now, and you want to buy when blood is in the streets, as the great Warren Buffett always says. It wasn't Buffett. Who said blood in the streets? Was it?
I think it's attributed to a lot of people, but Rothschild primarily, yeah.
That's correct. We'll do that again. Rothschild, as I mentioned. A live edit. As you got. And then I got to go back to back.
Yes, you're back to back.
I will go when your Uber driver tells you that they're selling Bitcoin. I've had many fun Uber drives coming back from the city, and I've had so many. XRP is kind of their favorite one to talk about. But for those that, when they say kind of the inverse Kramer here, the inverse Uber driver telling you to buy stuff, when they tell you that they're selling stuff, that is about the time. Or when your grandma tells you that they're selling their Bitcoin, or your friends all start texting you saying Bitcoin's dead, that's a good indicator usually.
All right. Yeah. I'm going to go along the same vein and say mom text. When your mom sends you the text, are you okay? Is everything all right? Is Bitcoin going to survive? That's a pretty good indicator to me. I got one of those last 2 weeks, I guess 2 Fridays ago, when we crashed down to 60K. Yeah.
Or was even worse is an in-law text. I got one from my in-laws.
Yeah.
And I was like, I'm fine.
Is our daughter going to be all right?
Yeah, exactly.
Yeah, dude. John, did your mom text you?
My mom texted me, but not about Bitcoin, thankfully.
Okay,
so
cool.
Yeah,
you're safe then.
All right, I'm going to give an actual real answer on this one. I'm going to say when we get back above the 50-week moving average, because then we will be in bull market territory on technicals. And so one of the ways you actually know where you've bottomed is in hindsight, right? So once we get actually back into a technical bull market, then we'll know the bear market or the bearish period is over, and we'll know where we bottomed. So that'll probably happen several months after the fact. But that is, I think, one of the ways to tell for sure that we've bottomed and we're now in a new bull market.
This is why we bring you on, because you've got the actual technicals here. So yes, thank you. Thank you for that. Yeah, we need to get above the 50. That was the sign. That's when the people who actually sold Bitcoin this turnaround, they said, hey, we're below 50, you got to get out. And we were like, no, we're going to see a new all-time high anytime now. And they were sort of proven right this time around. The question is, how quickly can we get back to new all-time highs? I still think that this year it's a possibility. 2026, we're in a new era, institutional era. And as you said, retail hasn't been here for a long time. If retail starts to get a little sniff of this thing, we could be very well above 126 by the end of this year. All right. So the way this works, John, you go twice because this is a snake draft. Do you have another indicator?
Okay. I'll just say Michael Saylor buys Bitcoin because he's never going to stop. Okay. And so at some point at the bottom, Michael Saylor will buy the bottom.
He will have stacked the bottom. Yes. Though it's funny when you look at the when you look at the heat map of his buys, they were a whole lot more frequent at the highs of end of 24, 25, but
because he had more capital, there was more money coming at him.
Yeah, keep pushing that ATM.
It worked. It worked.
Robbie, you're up, dude.
I'm up. I'm going to say rage quits. You got to see the rage quits. I think one that we've had already this cycle, which was pretty prominent, not necessarily a Bitcoiner, but a big crypto guy, was Kyle Samani, co-founder of Multicoin Capital. He put out a pretty infamous tweet about a week or two ago saying that he's stepping down. I mean, he's one of the biggest Solana bulls, right? And now he's backing away and he's shifting towards AI, robotics, and longevity tech because the crypto tech just isn't that interesting to him anymore. Yeah, weak sauce, dude. This guy was a hardcore pusher of the Solana ecosystem that fueled, of course, the meme coin craze that burned a whole lot of people. And then he's able to step away with his VC money in the aftermath with this just smoldering wreckage that Solana left. But yeah, you got to see this. The cycle isn't over until you see a bunch of these prominent figures who are very loud tuck their tails and run away.
Or even when the daily stack has AI, and we talk about stocks occasionally now as well. So when your favorite podcasters start to bring in new segments, that could be a sign the bottom is near. I'm going to go with kind of obviously along these same lines here, but CNBC running is a Bitcoin dead segment. So I did some data searching here. It's been called dead 470 times by media outlets since 2010. And pretty much like clockwork, every single time these ads come out, obviously scares off retail. They capitulate, right? They're selling. And so I think just the media consistently saying is Bitcoin dead? There's headlines, massive losses. You just everywhere you look, it's like Bitcoin's dead. That's where you get those mom texts, right? And so mainstream media, I would say, is CNBC is kind of the main financial media. And whenever they say it's dead, that's usually a good indicator when it feels like it's falling off so much. Oh shit, I gotta go back to back here.
Yeah, you're back to back, buddy.
Let's go with kind of along your same lines. You see a lot less laser eyes, right? Unless you're Michael Saylor, of course. Then you still Bitcoin's just dropping off a cliff, and he's just like hold, and he's doing these laser eyes. So along the same lines as the CNBC Bitcoin is dead, and kind of your rage quitting is the laser eye removal. People taking Bitcoin out of their profiles. You start to see, those rage quits as well. But the laser eye removals, you start to see a lot less of those around this time.
Yeah, I'll add on to that and say I think the laser eye removal was a huge sign in 2021, 22 that Bitcoin had bottomed, that people were sort of embarrassed to show the laser eyes when it had gone from 69K down to 16. I would say this time around, it's going to be the shutdown of the groups such as Irresistibly Long MSTR, the fanboy clubs of the treasury companies. I think that people are going to be heading towards the exits for those in droves because there was a lot of people were irresponsibly long in those groups, and they got burned.
This guy,
and so I think that will be this cycle's laser eye removal. And so now over to me, and I am gonna go with Peter Schiff, CNBC. He has been kept off of the airwaves for a very long time But now he's back and he's on Fox Business. He's on CNBC once again. Of course, gold is up, but he never misses an opportunity to talk crap about Bitcoin. So yeah, Peter Schiff hubris is a sure sign that Bitcoin has bottomed. And we have seen a whole lot of that on the timeline the last couple of weeks. So same way that inverse Jim Cramer, I think you gotta do an inverse Peter Schiff, because when he gets too loud, you know that he's going to be bitten in the butt by Bitcoin, because this beast is coming back. All right.
I'm in for the last one here. I think I'm going to go with Rob, your idea. Theoretically, at the bottom, the MNAV values of a lot of these digital asset treasury companies should get to their most depressed levels, or around their most depressed levels, and they are going to be the most ripe for acquisition or dissolution that we'll see. So I think DAT acquisitions is going to be a sign of a bottom, because there are going to be a lot of players in the market who want to get more Bitcoin, more capitalization for cheap. And when a lot of these digital asset treasury companies are well below their MNAVs, that means that they're great to buy if you want to get those underlying assets at a major discount. And so I think that we're going to see someone make an acquisition of a debt, or some kind of merger, somebody going bankrupt, dissolving, selling out, something like that. That'll be something that I think that happens at the bottom here.
Yeah, it's funny it hasn't really happened yet. We did see it with Semler and Strive. They did an acquisition, and that helped propel Strive up to, I think, the upper echelon of Bitcoin treasury companies, in terms of there's only 3 in the world that are offering preferreds. You got Strategy, Metaplanet, and Strive. I really think they can only do that once you reach a certain scale. They needed to get above 10,000 BTC, which they were able to do by acquiring Semler's stack for a discount. How that deal treated the actual shareholders of, say, Semler, I don't know how great it was for them, but it's a way for these Bitcoin treasury companies to consolidate and fight to live to fight another day, right?
Right.
Well, that one was unique too, because Semler was an operational business too, right? I think we've seen this with DATs, that the ones that are just holding Bitcoin, even Saylor, right? He had to go out and get preferreds to drive new interest, right? And so I think what I think will happen in the next year or two is operational companies will start to do it. We talked to 2 guys that were at that conference. They're private. They have businesses, and with their treasury, they're just buying Bitcoin, right? And so you need to have some sort of cash flow business. I think a lot of my friends are realizing this. I'd love to buy more Bitcoin. I just don't have enough fiat right now, liquid capital to put in. And I think that's something that these DATs need to think about, right? How are you going to keep fueling that fire to buy more? So.
That's the Grant Cardone thesis, right? Is find something that has cash flow and put the cash flow into Bitcoin. It's a great strategy. If you've got the opportunity to create cash flow and you want to funnel it into Bitcoin, it's a great opportunity in the market for that. Yeah.
Yeah. Even Jody said with Stretch. So STRC, if you buy a Bitcoin, basically call it 70,000, you get, I think it's 11%, right? So you could take those dividends and redistribute to Bitcoin. So
yeah.
Are we ready for the wheel?
Well, one thing we got to do before the wheel is we got to give a shout out to our good friends over at Arch. Arch provides world-class security and white glove service for you to lend against your Bitcoin. If you're listening to the stream, you did the hard part, you stacked, you held, you didn't panic sell, but life happens. There's taxes, new opportunities. Say you want to buy a house and put a down payment down, but you don't want to sell your Bitcoin because it just feels wrong. That's where Arch comes in. Think of it like a flexible line of credit with rates starting as low as 8.5% APR. You borrow what you need, repay anytime, and only pay interest on what you use, all without triggering a tax event. So the best part, the Bitcoin stays yours. It's never rehypothecated, and its collateral is never lent out. It's held in a qualified, insured, bankruptcy remote custody with full transparency. So get your cash today at archlending.com. That's ARCHlending.com. Super simple, very fast. And it's a great time to take a loan out against your Bitcoin when it's already crashed 50%.
Use /daily stack as well for 1% off.
Ho, 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 ho.
If you're gonna take a loan, get a 1% less loan using /daily stack. Keeps the lights on for Rob and I as well. So appreciate it.
Absolutely. All right. So in terms of spinning this wheel, ladies and gentlemen, this is such a fun show. John, do you have a good time?
Yeah, this has been great. I really enjoyed this.
Would you want to come back ever?
Sure, of course, Rob. That was a really weird tone the way you asked that, but yes, of course.
No, I'm never coming back here again, guys.
Cool.
It sounded like a trap. Like, would you want to come back sometime?
The podcast, when podcast voices go wrong, basically.
Yeah. Avi, do you know what we're doing here?
I think we're spinning the wheel, but apparently we need to hang tight because it looks like there's still some time left, right?
All right. Well, then we will spin the wheel on the back end, and we will make sure that the winner is announced live on X, and they will get their sats, because we just want to make sure that John has a good time here and he is enjoying himself. So in terms of what you got coming up next, John, tell us what's on the roadmap for you in 2026.
There are a lot of conferences I'm excited about here in New York. Ethereum's doing one. Blockworks is doing an event here in New York. It's just like it's conference season basically. So there's going to be a lot of those happening, Consensus and Bitcoin and other ones. So I'm looking forward to all of that. I'm excited about building in the bear market, right? Like there's a lot of opportunity. I'm excited to take advantage of that, and just keep engaging with the Milk Road community, growing that, investing in that. Just being on this journey together. I think one of the worst mistakes an investor can make in volatile times like this is to try to go it alone. For anybody, I would say find community, find people who explain things in ways that you can understand, resonate with you, and get in community. So you're not just you against the market, but you're in it with some people, and you can group think some of these things and get some cognitive power behind what you're doing, and sort of disconnect from your emotions and trade based on data, based on the longer term thesis, allocate for the opportunity that the market's giving us right now. That's what I'm excited about in 2026. But really, I feel like very comfortably positioned for this, and I'm excited to just like let the market come to me while everybody is like chasing pumps and panicking. I'm just gonna like stay calm and watch the market come to me, because I think it will eventually. So that's kind of what I'm looking forward to in 2026, and just meeting more people, growing the network. And I always end every stream on my podcast by saying, stay safe, stay educated, and stay bullish. So that's what I'm gonna do.
Boom, there you go.
We need our own tagline. I've been thinking about that. And follow you on Satoshi Jesus.
Bitcoin Jesus.
Bitcoin Jesus. Sorry.
Bitcoin Jesus Eve.
It's Friday afternoon. Give me a break here.
I'm on X. Yeah.
Go ahead.
Milk Road Macro at Milk Road Macro at Milk Road, and then my personal account is at Bitcoin Jesus. I'm in there. BitcoinJesus.eth.
Definitely give them a follow. If you guys are not following the Daily Stack, please do. That is where we're going to announce the winner. Giving 21,000 Satoshis away. As we continue to grow, that number may grow too. So appreciate it.
Yeah.
And just one more sign off, John. With your sign off here. So
no, I want to just get on John's point about that. It's about community, right? And when the market goes down, you still got the people, the friends you met along the way. And so we're here every single day, 5 days a week, 12:30 p.m. Eastern, going live, making sure that we have a community, that the Bitcoiners have a voice. You can always hear from very smart, educated people such as John, who have great insights into the markets, what is actually going on behind the scenes. And then once you have that information, you have that community, you're a lot less scared. It's a lot less scary out there. So that's what we're here. We're trying to build some fun, build a community, and make sure that you guys hold on to your Bitcoin, because it's really cheap right now. It's going to get a whole lot more expensive. So don't go buying back later. Thank you guys for tuning in. This has been absolutely awesome. John, you're the man, and we will have you back on later.
Everyone,
cheers, everybody.
Awesome.